Olive Shima-chan. Want to learn about stocks? No? Well, he doesn't want to learn. Right, so welcome back to my channel where I talk about traveling, living in Japan, and now finance. All the hype going on about the GME stock kind of increase. A few friends are talking about stocks and showed interest, so I wanted to make a video on it. I think it's really important for people to do. So I'm going to talk about ETFs, some important points to think about when you're buying ETFs, and also long-term investing, what it is, and lastly, why it's important for people who work abroad or people who haven't made a retirement account to invest somehow. Let's take a look. And before we begin, you can find all the links to the reference information that I used at the bottom of the page in the description. So what is long-term?
Long.
Long-term investing. So it is essentially a buy it and leave it mentality. So there's day trading, where you essentially buy a stock at low point, sell it at a high point, and then keep that difference. Long-term investing is you buy it and forget about it. And I like that a lot more. It lets you save energy and use that energy elsewhere instead of watching the market. So that's long-term investing. What is an ETF? So an ETF is a very diversified basket of stocks, essentially. ETFs are great because they are a lot more diversified, and in that diversity you get much less risk. So if you buy one stock and the company goes under or does something bad, you lose all your money. If you buy an ETF and 10 of the stocks do poorly and maybe 25 do well, it's not so bad. So let's look at 4 points which are really important in picking an ETF. Point 1 is the fees. That money.
Some pay cash money. Cash money never pay me, but your boy did his thing.
Alright, so fees for ETFs are called the expense ratio. And generally it's going to be about 0.05% to about 1%. Good range I've read is about 0.05% to about 0.075%. Okay, so that's the percentage you will pay to the people managing the ETF or putting it together. Anything above 1.25% is a bit expensive, I've read. So, second thing you want to look for in an ETF is diversity. Yeah. Alright, so of course, diversity is great. And finance is also great. What I mean by diversity is that the ETF holdings are based on a broad, widely followed index. An index means essentially a bundle of stocks that are made to kind of represent a particular sector of the stock market. So bundle of stocks that represent maybe real estate or maybe tech, healthcare, something like that. Okay, so diversity means you have a nice mix of all those. You don't have some obscure part of the market that's maybe just only one thing or something that's kind of odd. Third thing is ease of buying and selling the stock, and that's called liquidity. Alright, so this is shown by the bid and ask spread. So you want that spread to be very low. And the bid and ask spread is the difference between the highest offered purchase price, or the bid, and the lowest offered sale or ask price. So if I'm selling a banana for $20 and someone will only pay $5, there's a big gap, and I'm probably not going to sell my banana. Whereas if I'm selling it for $6 and someone's trying to buy for $5, it's a lot higher chance you're going to sell it. So you want that bid-ask spread to be low for your stock, otherwise it's going to be hard to sell. So next one, tracking error. So again, like I said, the ETFs track usually a certain index. There are total stock market ones, there's healthcare ones, and the tracking error essentially is how well it tracks that market sector. Is it doing a really good job representing healthcare or housing, or is it not really have a good mix of stocks that don't necessarily represent the sector? And one way you can find out if it's has tracking error is if maybe the healthcare sector in general has a 5% increase in gains, but your ETF for healthcare only has like 2. So that means there's something not right going on with those stocks. And last one, PE ratio. This one's kind of controversial, but this is the price of a stock divided by its earnings. Okay, so you want low price and high earnings, and meaning just by that fraction, you want a low number. However, low number and cheap doesn't always mean good. So remember that. Like with meat, if you buy cheap meat, maybe it's on sale and great and a good deal. Or maybe it's rancid and you're gonna get food poisoning and like get meat phobia and die. So you gotta watch out for that. Don't only use PE ratio. So let's take a look really quick at how to find this information on Google. Alright, so let's take a look really quick on how to find some of this data that I'm talking about. So I just Googled VT Sachs right here and went to Yahoo Finance. There's a lot of other websites you can use. So if you're looking for diversity, you can scroll over to the holdings. That's going to show you what's actually in the ETF. That's incredibly important. You want to know what you're buying. So this guy's mostly stocks. You can look down. That tells you what type of sector that it's in, financials or healthcare or technology, and so on. So there's a lot of information. It tells you the exact stocks that are down here. So top 10 largest chunks of stock that it holds: Apple, Microsoft, Amazon, all that. So you can look in there. That's of course important. If we go back to the main one, that's diversity. If you go down, you can see here there's expense ratio. So you're going to be paying 0.04% just to own the ETF, which is pretty good. Not too high. So yeah, you can look around to see the other things like the liquidity and tracking error just by Googling it. So those are the main things you're going to want to look for. You can also look in here for assets. So 1 trillion, so that's a lot of people buying and selling this, so that's really important. So things like that. It's the next part, how to get ETFs. So we talked about what to look for. Next, how to get them. You can use an online stockbroker. I use TD AMeritrade. I use the TD AMeritrade app. Those guys are great. There's also Vanguard. Those guys are cheap. And they're also robo-advisors. Those guys have a robot to manage your fund. Okay, so that's how to do it. Next week, I will show a video of a walkthrough of how to start a TD AMeritrade account. So stay tuned for that. Next, my recommended and preferred way of investing. So this is to buy very diversified total stock market index funds. So index again means something that just represents the sector. Total stock market index is an index that just is supposed to represent the US stock market as a whole. Okay, and I like these because it's very, very diversified, and in general, we want the US stock market to go up. Hopefully it's gonna go up, otherwise we probably have bigger issues at hand than, you know, maybe us just losing money. Some examples of total stock market index fund ETFs that I know of. SPY, that's the OG. It's the first one. It's very, 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 very popular with the most funds bought and sold, so the most volume. There's VTI, just another one, VT Sachs, or VTSAX, and VOO. So these are just a few examples. There's many, many more. And I bought some of these in March 2020. It worked well, but I wouldn't try to time the market like that. Many people say you shouldn't. Instead, what is good is to dollar cost average. And what that means is to essentially set aside however much money you're comfortable using and buy stocks or ETFs at a certain day of the month, just arbitrarily, no matter what the price, unless it's incredibly high, exorbitantly high. So that's going to average out the highs and the lows and just give you an average of the price. So why I like this, in general, again, I said it's diversified. In general, the stocks go up over time because, again, people want the US stock market to grow. It should, otherwise there's probably a big problem. Take a look at this graph, and you can see, yeah, pretty much over time it's growing. So if you have a long time horizon, maybe if you're in your 20s or 30s, or maybe even teens or 40s, or even 50s, really, anyone, then you have time to wait out any potential crises like the 2008 crisis here or the 2000 tech bubble. Now you can just wait out those dips. And lastly, why this is important for people working abroad. I think this is very, very important for anyone, especially people working abroad, because most people at their jobs have the option of either starting a retirement account or some sort of 401k or a Roth IRA, at least in America. I'm sure there's other equivalents in other countries that I'm not familiar with yet. But as someone on Jet, or maybe Interac, or even someone working maybe part-time or abroad, you have to set those up yourself. Because as I've seen on Jet, there is no retirement, obviously. It's temp work. So you don't want to miss out on 1 to 5 years of compound interest you could be getting on these stocks. It's going to be a huge amount of potential loss that you're getting. It's good for you to take steps to do that for yourself, for your own financial well-being. So why it's good? Essentially giving yourself free money.
I get it. I get it.
I mean, who doesn't like free money? It's great. I like coupons. I like money. Put another way, it's kind of like planting a seed. You know, if you want fruit, you should plant the seed quickly and have as much time as possible. If you grow it only for a little bit of time, it's just going to be a little tiny tree, maybe a little bit of fruit, but you're not going to get much. So essentially it's the same with stocks. The longer you have them, the longer you let them grow, the longer you let them get you dividends, and then you can get more stocks and more money on those dividends, the more growth you will get. This essential idea is called compounding. You might know about it. This is incredibly, incredibly powerful for finance. And that's why, again, I have to emphasize it's really important. The earlier you can start, the better. I wish I started when I was like 18, right when I got a job, but I didn't even think about this until I was like 26 or 7. So that's very important for people to do. Do this for yourself, please. I'm begging you, please. Please do it. It's really important. In conclusion, one of my best friends kind of summarized the idea and said that the best day to invest is yesterday. Yeah, so I hope this helped you out. I hope you learned ETFs, what to look for, how to buy them, why it's important for people working abroad, because you have to do it for yourself. I hope you can utilize your time. I hope also this can inspire you to kind of work for your future in whatever way you see fit. And also feel free to like or subscribe, and please comment below. So what are your goals? What are your financial goals? Have you invested? Do you want to invest? Do you know someone who's invested? Have you made money or lost money? Let me know in the comments. And next week, I'll post again a walkthrough of how to start a TD AMeritrade account so you can get this ball rolling and work for your financial future. We'll see you next time.